Welcome to NYSC Euronext, NYSC Amex, NYSC ARCA Options webcast, staying current with upcoming upgrades. I am joined by the always illustrious Amy Farnstrom, and I'm your host, Todd Weilman.
Hi, Todd.
Hi, Amy. It's good to see you. No guests today.
No guests today. It's just us.
Okay, well, that sounds good. Well, moving on to our legal disclaimer, as everybody knows, this is just for education and illustration. This is not any forward-making statements. So our agenda today, we're going to be talking about our newest exciting product, Short-Term Option Series. We're going to be talking about changes to customer priority on ARCA. I know there was some misunderstanding about this, and that was all unintended. And we're going to talk about configurable callers, some new rules for rejects on market orders. Tag 439 is going to be on the fixed drop copy, and we're going to be talking about the expansion and flex option. So with no further ado, Short-Term Option Series. So this is our most exciting, innovative product in a while. These are option series that are going to last a little over a week, 8 days. We're going to start listing them each Thursday for expiration the following Friday, so a week and a day later, except if there's an expiration Friday already scheduled.
Right.
Yeah, so like any regular options that expire the third Friday, we will not obviously be
duplicating them.
That's the perfect word. And also for the quarterly options, like the end of June, we would not be listing another option series that last week. So these we can start listing them either Thursday or Friday. On the Amex, they've listed mostly ETFs. And then on ARCA, we've listed mostly equities, except we do have one ETF on ARCA, which is XLF.
And you can find all that information on the website, right?
It's all on the website. Also, there's an interesting blog post by yours
Todd
truly,
Weilman.
and you can go and read that. But if you've listened to our webcast today, you'll know everything you need to know about them.
Well, and I do, I'll take this opportunity to just point out to folks that if you go to the landing page of NYSE, there's a section right on that front page that's called Exchange Blogs, and this is a really good place to get some information and sometimes a little bit of additional color on initiatives. Some of the trader updates we put out are short and sweet and to the point, and the blogs, a lot of times we use those to go a little bit more in depth and have a little fun at the same time like we do on these webinars in describing new functionality. So Todd's exactly right. You can learn about short-term options there as well as a lot of our past initiatives, and it's just a good spot to go check, on a regular basis to see what's up in the world of options.
It is a good place. Also, other happenings on other exchanges at NYSC Euronext, they also talk about
other platforms.
Other platforms.
Yep.
Thank you. Yes. An interesting thing about these short-termers, they were made possible by OSI.
Yep.
So everybody that put in a lot of work over the last 5 years, thank you,
Yep.
because now we can have some products that really help out traders. And the best thing about this that I like is you only have to pay for the theta and the volatility that you want to, the time decay.
Yeah.
So, and those are the two nice things.
That's right. Or take advantage of, the acceleration in that last week of where the time decay really erodes.
The old graph that sort of falls off the chart.
Exactly.
So perfect day. And now with the Thursday listings, you can obviously roll from one short-term position to the other. And as Amy said, you can take advantage of the time decay as it collapses that last 3 days, and you can sell these options. Remember, options you can either buy or sell.
Right. Or you can take advantage of upcoming events in the very short term. Good.
Excellent. So on to changes in customer priority.
The first thing that we need to say about this is that we are still pending SEC approval on this change. We are, planning on implementing this pending SEC approval. We expect the go-live date to be somewhere around August 3rd or thereabouts, first part of August. But again, want to make this clear that this is pending approval by the Commission.
Thank you, Amy. I should have put that in the slide, but
That's all right.
But we told you about it.
So just, just a quick overview. Right now, when we launched OX for ARCA, we went to the Commission, to the SEC, with the price time platform that was modified by guaranteed allocation to the LMM. And they said, that's great, but you need to make sure that customers get their due priority. You can't have both price time and guaranteed allocation and cut the customer out. So what we did is, currently, any customers who are ahead of the LMM in time get customer priority, potentially jumping to the front of the line in front of other market makers or other non-customer interests who are ahead of them in price time. So it's a little bit convoluted, and I think that a lot of folks have never really been clear. We've made repeated efforts to, be very transparent about how this functionality works. But, kind of what we've come to the determination is that, ARCA is NYSE ARCA is the price time model. And so the change that will happen is if an order arrives when a customer is ahead of the LMM, and the LMM would also receive a guaranteed allocation. That means the incoming order is large enough to trade with all the customer interest and the LMM. We're just going to trade at price time. So we're eliminating customer priority in all cases on NYSE ARCA. NYSE Amex obviously retains full customer priority in all circumstances, situations. Customers, number one. Customer is keying on Amex, as you've said many times in your blog. So this is for NYSE ARCA only. Okay? That's the only scenario that changes, too. It's a very limited scenario that occurs. Customer ahead of the LMM in time with an inbound contract-sided order that's large enough to trade both with the customer and to trigger an LMM percentage guarantee allocation. Everything else stays just the same as it is today.
So we're not throwing the customer under the bus, and it really changes nothing for the customer.
Well, I mean, it does, but in the terms
in the
of
allocation.
in the terms of price time, right, there is a change. So in all other situations, though, where the customer is not ahead of the LMM in price time, the LMM still gets their guaranteed allocation. Everything else trades in price time just as it does today. If the LMM's not at the MBBO when the order arrives, everything trades in price time as it does today. So really it's just a very isolated change in priority.
Okay.
Okay?
Excellent. Configurable collars. So we talked about this on another webcast a couple of months ago in May. I guess that's 2 months ago. And so we can configure on two parts. We can configure the collar timer, which starts off set at 1 second or 1,000 milliseconds. And also we can configure the collar width. And the collar width start out on it's the legal width of a market, and that's our collar width. And both of those are configurable.
Yes, and in the past, the collars have been configurable. Everybody knows when the market kind of goes crazy and a lead market maker or a client will call in and say, we're asking for a 2 times width exemption to get these series open. We're asking for a 3 times width exemption. That, is something that's been in place since we implemented collars and even before collars, just to open the series. What this changes is that now, if there's some concerns about, light liquidity in an issue or other market conditions, the trade desk can also make the determination to narrow those collars so that instead of being based on the collar widths that we have on this slide, it can be a percentage of those collar widths. So 50%, 0 to $1.99 then becomes 13 cents, which gets rounded down to 10 cents so that it's on an MPV. 20 cents at the next tranche, 25, 40, and 50 cents. So and they can really fine tune it because it's based on a percentage. So they can also go to 120% and really be very dynamic and responsive to what's happening in the marketplace. And this is on an issue by issue basis.
Issue by issue basis. So you can have we can go like a 0.1x, and that would be 10% of the collar width right there.
That's right.
So like on a $2 to $5 option price, you would have you'd go 0.1x, 10% of X, and it'd be 4-cent collar.
And then, of course, that would round up to a dime because it has to be at least 1 MPV.
Okay.
Okay? This, excuse me, is scheduled to go live on Amex on July 12th, and the following Monday, July 19th, it'll go live on NYSE ARCA.
Okay. Very good.
Excuse me.
I know it's warm back there in New York, so we hope y'all are all surviving there. So, if you want to review the collar, there again is the webcast from May that's reviewable, but realize that, collar protection doesn't kick in until there's order balances coming out of an auction, processing a new incoming order when the market is wide, or during the execution of the order, the market becomes wide. So that's when collar protection does get queued.
I apologize, I jumped ahead there. Here's the appropriate slide
Oh,
for
yeah.
what Todd's talking about.
Woo! Woo! And so markets must be considered wide before the collar protection actually starts protecting the customer.
Yes.
Orders.
Yes, if there's an imbalance coming out of an auction, as you said, or if the market's already wide, or because an execution becomes wide, then we implement the collar.
Okay. And the collar timer just tells our matching engine when to wake up,
That's right.
survey the scene, and whether to...
That's right. It's just so that a market order that could potentially get a fair value execution doesn't get held up in the marketplace for an inordinate amount of time. And as you said, Todd, that's all explained, I think, pretty straightforward on the webcast on collar protection that we did a couple months ago.
Pretty in-depth, I think.
I just want to take this chance to say, anybody that has any questions, you can type your questions in at any time during the webcast. We will be looking at your questions at the end of the webcast and doing our best to answer them. So if any questions have occurred to you, up to this point, go ahead and send them to us now and during the rest of the webcast.
Yeah. And that's the text box at the bottom of the screen. Also at the bottom of the screen, you'll see a magnifying glass, and that could make the slideshow larger for your viewing if you're sitting across the room from your monitor, laying on your couch, enjoying this illuminating, air-conditioned, splendor. Now going on the collar view, next thing that's perfect is there's new rules for rejects on market orders. So we sort of put this under the out of an abundance of caution.
Yeah, I mean, we have been seeing some instances in the markets, May 6 is a good example, where liquidity dries up, and our policy in the auction space has always been, if we can accept a market order and peg it to a price that we believe is a fair price, we're going to do it. We don't want to reject your order back to you. However, we've seen some situations where what we've been doing, which is pegging the market order to the last sale price, doesn't ensure that market order is going to get a fair price execution, because quotes just might not come back into the market for a while if quoters are having difficulties or the market is experiencing some gyrations. So we're going to amend this and be much more like the equity side of our business, which is if there's no quoted market, anywhere, no NBBO, no quoted market on our exchange, even if there's a last sale, we're just going to reject that market order back to our client, so that, you as the client have, you're empowered to do what you need to do with that market order. And there's no questions of like, it's going to get filled, what's going on, I don't see any markets, and it just takes a lot of uncertainty out in those situations that are stressful enough to begin with.
Right.
And again, that goes to NYSE Amex on the 12th and to NYSE ARCA on the 19th.
Very good to point that out. Fixed drop copy, tag 439.
Excuse me.
And this is the optional tag for clearing member trade agreement, the CMTA. We've included this on the fixed drop copy, and it is actually available. No, that goes in. Full disclosure, I do the slides, not Amy. So it will be available now if it was July 12th on the Amex, and it will be available now if it was July 19th here on ARCA. So
That's correct.
just notice that Amex changes are going in next Monday, and ARCA changes are going in a week and 4 days. Sorry about that, guys.
Okay.
Okay, so, and then the last thing we want to talk about is expansion of flex options. With OSI, Option Symbology Initiative, we have gotten to expand the products that we can offer flexes on. And, you know, flex options just gives you a lot more options on how to structure listed traded options. A couple of things that are new is that there's going to be no minimum size for opening a flex transaction. This is a penny pilot that goes on through March of next year, but you don't need that. We can have expirations up to 15 years now on a listed exchange-traded product, which is, I think, pretty exciting.
Good tool.
You can also start listing flex options on an anticipated series that you think is going to be listed in the future. Since we start listing options, so you know, you don't have to wait for us to actually list the option. You can start trading the flex on that option, and then it would be aggregated into the position. Also,
when that expiration month does get listed in the normal expiry cycle.
Oh, right.
Yeah.
Thank you, Amy. And then the last thing is you can have flex options. We're going to be allowed to expire any given business day. You can even have an expiration of a flex on a normal expiration Friday.
That's right. But the caveat there is that if it expires on a normal expiration Friday, it can't have the same exercise style and same exercise price as an existing series. So you can have two of the three, but you can't have all three.
All three. Yeah, it can't be the total similar in all respects, except it's a flex.
Yes.
That totally makes sense. Also for flex index options that expire on an expiration Friday, and they must have the settlement calculation AM settled as the non-flex index option.
Right.
And no fractional strikes anymore.
I miss fractions, you know.
I do too.
Talk about a waste of talent. You know?
Right.
What's 1 in a teeny minus 13 teenies?
That's a
Nobody
quarter.
cares. Nobody cares anymore.
Nobody cares? Teeny 8, 3 teenies, quarter. Miss those days back in the day. Here's a couple of reasons on why to trade flex options.
Why would you want to trade flex options, Todd?
I think one of the most things is counterparty risk, and realize that with a flex option, you are getting it cleared through a AAA rated clearinghouse, the Options Clearing Corporation. I think that's one of the most important things.
Yep.
You get an independent daily valuation by the same people, OCC. You get an availability of daily price and open interest reports.
Mm-hmm.
And you can just, it's an exchange-traded product, and yet you can customize it to both yours and your customers' needs. How do you like flex options?
Well, I think I like the idea that you can set an expiration date, based on an event horizon, to gain protection or take advantage of leveraging opportunities around a specific event date without waiting for a normal expiration cycle. I mean, there's just a lot of flexibility inherent in that, and really, being able to take charge of setting your own parameters, while at the same time, getting good price discovery in a competitive market rather than single party, single counterparty.
Uh-huh. Yeah.
Good tool.
Yeah, good tool, good tool.
Okay, well, I don't see that we're getting any questions this time, so that must mean we've done a good job, I hope. What you can do, if you do have questions that occur to you after this webcast, you can send an email to myself or Todd. You can always reach out to Brandy Patterson on the trade desk.
Brandy loves talking to you.
Loves talking to folks. Paul Finnegan, for all you ARC customers out there, he can't wait to get on the phone with people and chat them up about anything to do with ARC options. And
reach out and touch Paul.
Yes, and on the Amex side, we've got James Hyde, Bill Ryan, several very good fellows over there.
All right.
So, please stay in touch with us and let us know if you do have questions that come up about any of these initiatives. We're always happy to talk about them.
And if there's any subject that you want Amy and I to discuss on a future webcast, or if you have any ideas for a future webcast, please send Amy and I an email, and we would put that on the queue to discuss. Now, you'll find a copy of this webcast on our website, nysc.com, and it will be posted tomorrow, Friday. Just go to Futures and Options on the left side of the page. You'll see the page, and then hit the Overview tab. There's an Education tab. Check the Education tab, and that's where the webcast will be posted, and it'll be posted there tomorrow. So everybody loves Brandy, that's for sure.
Good stuff. Yeah, we just got a nice comment for Brandy. We love Brandy here too.
Yeah.
So, well, I hope you all enjoyed this webcast and that it was informative and helpful. And we'll look forward to speaking with you again next month. Thank you, Todd.
Thank you, Amy.
As always, a pleasure.
Yes. Good night.
Bye-bye now.